Welcome back to XRP On Moon, the place where we break down the biggest XRP news, market signals, and explosive predictions shaping the future of crypto. If you are watching this right now, you are early to a conversation that could define the next major move in digital finance, because today's topic is not just another rumor or passing headline. This is something that has already started shaking the entire XRP community to its core. Something major has just been released, and it's sending shockwaves across investors, traders, and analysts worldwide. Reports are circulating that Tom Lee, one of the most closely followed market strategists in the financial world, has pointed toward what many are calling a potential massive XRP explosion scenario. And whether you believe in bold predictions or not, the way this narrative is building is impossible to ignore. Now, before jumping into emotions or hype, let's break down what is actually being discussed. According to market chatter and interpretations of recent statements attributed to Tom Lee's outlook on digital assets, there is growing speculation that XRP could be entering a phase of extreme volatility, followed by a powerful upside expansion. This is being tied to broader crypto market cycles, liquidity shifts, and increasing institutional attention toward blockchain-based payment systems. What makes this moment even more interesting is the timing. The crypto market as a whole is showing early signs of momentum returning. Bitcoin dominance has been shifting, altcoins are beginning to wake up, and investors are once again scanning for undervalued assets that could deliver exponential returns in a short window. XRP, in particular, has remained one of the most talked about assets because of its unique position in cross-border payments and its long-standing legal and regulatory narrative. But here is where things get even more intense. The phrase massive XRP explosion is not just being thrown around casually. It reflects a growing sentiment among certain analysts who believe XRP is sitting in a compressed price structure, meaning that any major catalyst, whether regulatory clarity, banking integration, or sudden liquidity inflow, could trigger a sharp upward move that many retail investors are not positioned for. Think about this for a moment. Markets do not move randomly. They move in cycles of accumulation, manipulation, expansion, and distribution. And right now, many observers believe XRP may still be in a late accumulation or pre-expansion phase. That is why even small pieces of bullish news or influential commentary can ignite massive attention across social platforms and trading communities. At the same time, it is important to understand that predictions like these are not guarantees. They are interpretations of market behavior, sentiment shifts, and macro conditions. But what makes them powerful is not their certainty, it is their impact on psychology. When investors start believing that something big is coming, behavior changes. And when behavior changes in a large enough market, price action often follows. This is exactly why XRP continues to stay in the spotlight even during quieter market phases. There is always this underlying expectation that something significant is building beneath the surface. Whether it is new banking partnerships, regulatory updates, or global payment system adoption, XRP is constantly being positioned as a potential bridge between traditional finance and blockchain infrastructure. The momentum around XRP right now is not happening in isolation. To understand why this massive XRP explosion narrative is gaining so much attention, we need to look at the deeper forces quietly shaping the market behind the scenes. Because while retail traders often react to headlines, the real movements in crypto are usually driven by liquidity cycles, institutional positioning, and macro financial shifts that unfold long before the price reacts. One of the biggest factors fueling this discussion is the increasing belief that large financial players are gradually preparing for a new phase of digital asset integration. Over the past few years, traditional finance has shifted from outright skepticism toward blockchain systems to cautious exploration and now toward selective adoption. In this environment, XRP stands out because it was designed specifically for fast, low-cost cross-border transactions, something that global banking systems constantly demand improvements in. This is where the narrative begins to connect with broader market expectations. When analysts like Tom Lee are associated with bullish projections in the crypto space, it is rarely about short-term price movement. Instead, it reflects a macro view of capital rotation. In simple terms, capital does not stay still in financial markets. It moves from overvalued assets to undervalued ones, from safe zones to high-risk opportunities, and from slow-growth sectors to high-growth innovation cycles. XRP, in this context, is often viewed as a potential beneficiary of that rotation if conditions align. Another critical element is liquidity. In every major crypto rally in history, liquidity expansion has been the core driver. When central banks shift policy, when interest rates change direction, or when global risk appetite increases, capital tends to flow into speculative assets like cryptocurrencies. XRP, due to its established market presence and deep exchange liquidity, becomes one of the assets that can react quickly when that wave of capital enters the space. At the same time, we cannot ignore the psychological layer of the market. The crypto industry is heavily sentiment-driven. Once a narrative starts building, especially one involving major predictions or influential figures, it begins to self-reinforce. Traders start positioning early, algorithms respond to volume spikes, and social media amplifies the discussion. This creates a feedback loop where attention itself becomes a catalyst for volatility. This is exactly why the phrase XRP explosion is so powerful. It does not just describe a potential price movement, it triggers imagination. Investors begin to visualize scenarios where XRP breaks long-standing resistance levels, enters price discovery phases, and delivers returns that feel exponential compared to current valuations. Whether or not those scenarios materialize immediately is secondary. The expectation alone can influence short-term trading behavior. We also need to consider the regulatory dimension. XRP has spent years under legal scrutiny, and any perception of increased clarity or stability in that area tends to dramatically impact sentiment. Even partial developments, interpretations of legal outcomes, or shifts in regulatory tone can act as catalysts for renewed interest. Markets do not always wait for final answers. They often react to probabilities. When all of these factors come together, macro liquidity shifts, institutional interest, sentiment amplification, and regulatory speculation, you get the conditions that historically precede major market expansions. This is why the current discussion around XRP is not being treated as ordinary noise. It is being analyzed as part of a larger structural setup that could potentially lead to a significant repricing event if momentum aligns. But here is the key question that every investor is now asking. Even if the setup exists, what exactly would trigger the actual move? What would be the real catalyst that turns speculation into reality? And more importantly, is the market already positioning for it without most retail traders realizing it? What makes the current XRP conversation so intense is not just the prediction itself, but the increasing focus on what would actually need to happen for a true explosive move to begin. Because in every major crypto rally, there is always a trigger, something that shifts market psychology from hesitation into aggressive accumulation. And right now, analysts and traders are trying to identify whether XRP is quietly approaching that kind of turning point. One of the most commonly discussed catalysts is institutional adoption through real-world payment infrastructure. XRP was never designed to be just a speculative asset sitting on exchanges. Its core use case revolves around fast settlement between financial institutions. If even a fraction of global payment corridors begin utilizing blockchain-based liquidity solutions at scale, it would instantly change how XRP is valued in the broader financial system. Markets tend to reprice assets very quickly when utility transitions from theory into actual large-scale usage. Another factor being closely watched is the evolution of regulatory clarity. For years, XRP has been surrounded by uncertainty, and uncertainty creates hesitation in institutional capital. However, markets are forward-looking. Even the perception of stability or the reduction of legal risk can act as a powerful signal. Large funds do not wait for hype. They wait for reduced friction. And once that friction decreases, capital can move rapidly and in large volumes. That kind of flow is exactly what creates explosive price behavior in digital assets. But there is also a more subtle layer that many retail investors overlook: accumulation zones. In crypto markets, long periods of sideways movement are often misunderstood as inactivity. In reality, they are phases where larger participants gradually build positions without causing dramatic price spikes. This process is quiet, strategic, and often invisible to the majority of traders. If XRP has been undergoing such a phase, then any sudden increase in demand could cause a sharp imbalance between supply and demand. At the same time, global macro conditions are slowly shifting again. Interest rate expectations, inflation cycles, and liquidity injections from central banks all play a role in shaping risk appetite. When traditional markets begin to stabilize or show signs of easing monetary pressure, investors typically start rotating back into higher risk, higher reward assets. Crypto is often one of the first sectors to benefit from that rotation. And XRP, because of its established presence, tends to be a major participant in that movement. What is also fueling excitement is the behavior of market sentiment itself. Social engagement around XRP tends to rise sharply whenever there is any hint of bullish interpretation from analysts or influencers. This creates a reflexive environment where attention feeds speculation and speculation feeds volatility. It is not just about fundamentals anymore, it is also about narrative strength. And right now, the narrative around XRP is becoming increasingly charged with expectations of a breakout scenario. However, it is important to remain grounded in how markets actually move. Even when conditions appear aligned, price action does not move in a straight line. Liquidity hunts, fake breakouts, and sudden corrections are all part of the structure that precedes major expansions. Many traders who rush in too early during these phases often get shaken out before the real move begins. This is why understanding timing is just as important as understanding direction. So the real question becomes, is XRP currently in the preparation phase before a major expansion, or is the market still building expectation without immediate execution? The answer is not visible in a single chart or a single headline. It is hidden in the combination of volume behavior, sentiment cycles, and institutional positioning patterns that develop over time. At this stage of the XRP discussion, things start moving from speculation into something more analytical, where traders stop focusing only on headlines and begin studying market structure more closely. Because if a massive XRP explosion scenario is ever going to play out, it will not appear out of nowhere. It will first leave subtle clues in price behavior, volume patterns, and liquidity positioning long before the actual breakout becomes obvious to the broader market. One of the key signals that analysts often look for in situations like this is compression in price movement. When an asset trades within a tightening range for an extended period, volatility decreases, but pressure quietly builds beneath the surface. This is similar to a coiled spring effect. The longer the compression continues without a breakdown, the more energy is potentially stored for a sharp move in either direction. In XRP's case, many traders argue that this extended consolidation phase is exactly what makes the next move so significant. Another important element is volume behavior. In healthy accumulation phases, you often see periods where price remains relatively stable, while volume slowly builds or shifts subtly between buyers and sellers. This kind of structure suggests that larger participants may be gradually positioning without creating visible disruption in the market. Once that positioning reaches a tipping point, even a moderate increase in buying pressure can lead to a disproportionately large price reaction due to limited immediate supply. Market structure also plays a critical role. Traders often observe whether an asset is forming higher lows, holding key support zones, or repeatedly testing resistance levels without a decisive breakout. These patterns are not guarantees, but they are often interpreted as signs that momentum is building underneath the surface. For XRP, any sustained break above historically significant resistance zones would likely attract a surge of attention, both from retail traders and algorithmic systems that react to technical breakouts. At the same time, it is important to understand that not all compression phases lead to upward explosions. Sometimes the market uses these structures to reset sentiment, trap over-leveraged positions, or redistribute supply before continuing sideways or even breaking down. This is why experienced traders never rely on a single narrative. Instead, they look for confirmation across multiple signals: momentum, volume, liquidity zones, and broader market correlation. Another factor that cannot be ignored is Bitcoin's influence on the entire crypto ecosystem. XRP, like most altcoins, does not operate in isolation. If Bitcoin enters a strong bullish or bearish phase, it often dictates the direction of capital flow across the entire market. In bullish conditions, altcoins tend to amplify gains, while in uncertain conditions, they often lag or experience delayed reactions. So even if XRP is structurally positioned for a breakout, broader market direction still plays a decisive role in timing. Sentiment cycles also remain a powerful force. When discussions like XRP explosion start trending widely, it often signals that attention is shifting back toward the asset. This can attract new participants, increase trading volume, and create short-term volatility spikes. However, the real challenge for traders is distinguishing between emotional hype and structurally supported momentum. Not every wave of excitement leads to sustained upward movement, but every major move does begin with rising attention. What makes the current phase particularly interesting is the combination of all these elements happening simultaneously: long-term consolidation, recurring speculative narratives, macro uncertainty slowly shifting, and ongoing debate about XRP's real-world utility potential. When these factors overlap, markets often enter a sensitive phase where even small catalysts can trigger disproportionately large reactions. So the focus now shifts to confirmation. Is XRP simply building anticipation within a long consolidation range, or is it quietly transitioning into the early stages of expansion, where breakout signals begin to align? The answer to that question is what traders are trying to decode in real time. XRP and the growing speculation around a massive XRP explosion. It is time to bring everything together in a clear, grounded way so you can understand both the opportunity and the reality of what is being discussed across the market right now. When you look at XRP from a broader perspective, what stands out most is not just the hype or predictions, but the long-term positioning of the asset within the evolving financial system. Over the past several years, XRP has remained one of the most debated cryptocurrencies in the world, not because it lacks attention, but because it sits at the intersection of innovation, regulation, and real-world financial utility. This combination naturally creates cycles of extreme optimism followed by long periods of skepticism, and that emotional swing is exactly what fuels narratives like the one we are seeing today. Now, regarding the idea associated with Tom Lee's bullish outlook and the phrase massive XRP explosion, it is important to understand how markets interpret influential commentary. Even when statements are indirect, speculative, or based on broader market cycles, traders often amplify them into strong directional expectations. This is not unusual in crypto. It is actually one of the defining characteristics of the industry. Narratives often move faster than fundamentals, and sentiment can temporarily become more powerful than actual adoption metrics. However, real price explosions in any asset do not happen purely because of sentiment. They occur when sentiment aligns with liquidity, and liquidity aligns with structural market conditions. If XRP were to experience a true explosive phase, it would likely require a combination of catalysts working together at the same time: increased institutional participation, improved regulatory clarity, strong macro liquidity conditions, and a technical breakout from long-term consolidation. Without that alignment, even strong narratives tend to fade into temporary volatility rather than sustained expansion. It is also important to recognize the risk side of this discussion. Markets often create powerful emotional cycles where excitement builds rapidly, leading many participants to enter positions late, usually after significant moves have already started. In those moments, volatility increases dramatically, and price action can become unpredictable. Sharp pullbacks, fake breakouts, and liquidity traps are common features of these phases. This is why experienced market participants always emphasize timing, risk management, and confirmation over emotional reaction to headlines. At the same time, XRP's long-term relevance in the crypto ecosystem cannot be ignored. Its focus on cross-border payments, institutional-grade settlement solutions, and integration with financial infrastructure continues to keep it in discussions around real-world blockchain adoption. Whether or not a dramatic short-term explosion happens, XRP remains positioned as a key asset that reacts strongly to shifts in global financial sentiment and liquidity cycles. So where does that leave the current narrative? The truth is, XRP is at a psychological and technical crossroads. On one side, there is growing optimism fueled by market speculation, influential commentary, and historical belief in its potential for exponential moves. On the other side, there is the reality that markets require confirmation, structure, and capital flow before any major sustained rally can begin. Both perspectives exist at the same time, and the outcome depends on which side gains dominance in the coming market cycle. For traders and viewers following XRP closely, the most important thing right now is not to chase excitement, but to observe confirmation signals. These include sustained volume expansion, decisive breakouts above key resistance levels, and alignment with broader crypto market strength. Without these confirmations, predictions remain just that, predictions. And this is where discipline becomes more important than emotion. Crypto has always rewarded those who understand cycles rather than those who react to noise. Whether XRP is preparing for a major expansion or simply going through another phase of consolidation will only become clear with time and market confirmation. Before we close this video, it is important to say this clearly for everyone watching. This content is for educational and informational purposes only and should not be considered financial advice. Cryptocurrency markets are highly volatile and risky, and you should always do your own research before making any investment decisions. Never invest more than you can afford to lose, and always prioritize risk management over hype or speculation. If you found this breakdown valuable, stay connected with XRP On Moon, because we will continue tracking every major development, signal, and shift that could define XRP's next big move.